Greetings, everybody. Welcome to Liberty Call. Today is Thursday, May 2nd, 2024. Hope you're having a fantastical day out there in the interwebs. Kind of overcast here in Colorado. It's a little chillier. We got a cold front coming through. No snow this week, although I think we got some snow coming next week. So yay! Anyways. All right. Well, I hope, like I said, I hope you're having a good day. If you could do me a favor, if you could give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. Let's go ahead and get into today's numbers and see how things turned out. We got some green here domestically. The Dow Jones was up 0.85%, 322 points, closed at 38,225. S&P 500 was up 0.95%, closed at 5065. NASDAQ up 1.51%, closed at 15,840. I'm not really sure why the domestic markets are in such a good mood after yesterday's Fed meeting, but who knows? The VIX fell 5.13% today. It's at 1460. Canada was up 0.44. Brazil was up 1.07%. And Mexico flat, down 0.02%. In Europe, Germany was down 0.15%. The UK up 0.63%. France down 0.88%. The Netherlands down 0.01%. Spain up 0.16%. Italy was closed again today. Let's see here. Switzerland down 0.46% and Portugal up 0.75%. Russian exchange is mixed today. The MOEX down 0.86%. The RTSI up 0.2%. And the Asian markets, looks like some of them were open today. The Nikkei was down 0.1%. Australia up 0.23%. New Zealand up 0.36%. Looks like all the Chinese markets were closed except for the Hang Seng. It was up 2.5%, and the Taiwan weighted down 0.85%. So, again, I'm not really sure why. I mean, Powell didn't really say anything yesterday that would give anyone any real, comfort that, rates are going to go down. He kind of waffled around, whether or not there's stagflation coming into our future or recession or whatever. So he just kind of tap danced around it. So, all right, we'll talk a little bit about that in a bit. All right, let's get to today's market recap. U.S. stocks rise as tech leads charge ahead of Apple earnings. U.S. stocks climbed on Thursday following reassuring remarks from the Federal Reserve that Chair Jerome Powell about potential rate hikes, with investors focusing on earnings reports ahead of Apple's results. The labor market showed resilience as new claims for unemployment benefits remained steady at lower levels, reflecting ongoing tightness. Investors are eagerly awaiting Friday's April jobs report, which is anticipated to show non-farm payrolls rose by 243,000 jobs. I mean, that's not really that outstanding. Following a robust increase of 303,000 in March, Powell's indication that the next rate move would likely be a rate cut rather than a hike provided optimism for market participants. Again, I've read through a lot of this stuff. I didn't watch his interview or his press conference, but I didn't see anything in there that said that, we're definitely not raising rates. I mean, if inflation continues to stay sticky, they might have to. I mean, 5.5 is not exactly high by any stretch of the imagination. All right. Chipmaker Qualcomm surged 9% after reporting upbeat guidance benefiting from increased smartphone demand. The company highlighted growth in high and premier tier smartphone segments, especially with the shift to AI-enabled devices driving consumer upgrades. In contrast, eBay dropped 4% after issuing revenue guidance for the current quarter, slightly below expectations, citing a weakening consumer environment. The company forecasted revenue in the range of $2.49 billion to $2.54 billion, lower than analysts' expectations of $2.56 billion. Tech stocks remained in focus as Apple prepared to release its quarterly report after the market close. Although sustained weakness in iPhone sales is anticipated, attention will be on Apple's AI initiatives. Moderna saw its stock rise over 10% after reporting a narrower than expected loss for the first quarter, supported by cost-cutting measures and strong sales of its COVID vaccine. Are people still taking that seriously? Wow. Peloton gained 10% following the announcement of CEO Barry McCarthy's departure, which halted a decline in its stock. Carvana surged nearly 30% after reporting a surprise profit for the first quarter and provided a positive outlook. Conversely, DoorDash shares declined 11% after the food delivery service issued a disappointing annual profit outlook. Overall, market sentiment was buoyed by Powell's comments and positive earnings reports from several companies, although some sectors faced challenges due to consumer softness and specific company outlooks. Is what it is, folks. I mean, people are still thinking that things are in wonderful, which I just can't see. I mean, yes, consumer spending is still going, or well, I guess this way if you're looking at a chart. So it's, until spending tips over, I think things are going to continue just to stay, the inflation is just going to remain sticky, and we're going to be kind of in this malaise for a while. All right. Up next, the trade deficit, March international trade. This is a report from First Trust. And Mr. Who wrote this one? Strider Elas is the senior economist who wrote this one. All right, let's see what he had to say. In March, the U.S. trade deficit in goods and services narrowed slightly to $69.4 billion, primarily driven by a larger decrease in imports compared to exports. However, a more comprehensive measure of trade volume encompassing both imports and exports decreased significantly by $10.7 billion, highlighting subdued business and consumer interactions across U.S. borders. Despite a 1.7% increase in total trade volume compared to a year ago, exports remained flat while imports rose 3.1%. An important shift in U.S. trade dynamics is evident, with imports from China declining by 2% in the first 3 months of the year compared to 2023, and a notable 28.9% drop versus 2022. Mexico has surpassed China as the top exporter to the U.S., followed by Canada, highlighting changing trade patterns. Global supply chain pressures have notably eased, as indicated by the New York Fed's Global Supply Chain Pressure Index for March, which remained slightly below historical averages. This contrasts sharply with conditions 2 years ago, while the index was significantly above average due to supply disruptions. Yemen's Houthi rebels' actions in deterring container ships from transiting key shipping routes like the Red Sea and the Bab el Mandeb Strait are adding temporary volatility to shipping costs. Additionally, the U.S. continued its streak of being a net exporter of petroleum products for the 25th consecutive month, with petroleum exports surpassing imports. In economic news, non-farm payrolls grew at a modest 0.3% annual rate in the first quarter, with output rising at a faster pace than hours worked, leading to increased output per hour. However, unit labor costs rose at a higher 4.7% annual rate, up 1.8% from a year ago. Initial unemployment claims remained unchanged at 208,000, and continuing claims also held steady at 1.774 million. These figures contribute to a forecasted non-farm payroll report for April, anticipated at 225,000 jobs, to be announced Friday morning. That's tomorrow, folks. So, is that good news or bad news? I mean, we've had the trade deficit my entire life. It's something that, some politicians and economists really harp on. Me personally, I mean, we're sending our monopoly money abroad. They send us stuff, until the time that they say, no, we don't want dollars. We want Bitcoin or francs or gold or silver or something else. Your dollars are worthless. Until that day comes, it's a pretty good deal for us. Last up on the docket is an article from Zero Hedge titled Sticky Inflation Mentions on Earnings Calls Hits New High as Big Brands Warn About Buckling Consumers. And that's why I say consumer spending is probably our number one driver of the inflation and the economy right now. When that, starts to tip over, I think we're going to start to see kind of a cascade or a domino effect, throughout the economy. But again, that's just my own personal guess. All righty. Fed Chair Jerome Powell dismissed concerns about stagflation, citing current economic conditions with a solid 3% growth and inflation running under 3%. Powell referenced historical stagflation characterized by 10% unemployment and high single-digit inflation, which he did not see reflected in present data. Well, if we did inflation the way we did, or calculated inflation the way we did back in the 80s, inflation is a lot higher than it is right now. They cherry-pick the numbers throughout the decades and take things out to make things look bad. So, all right. Critics argue Powell has previously underestimated economic shifts, missing the initial inflation surge post-pandemic stimulus, which they took part in, and prematurely adjusting interest rate policy. Major U.S. corporations are cautioning about inflation's impact on consumers. Starbucks experienced a significant stock drop after disappointing earnings attributed to a cautious consumer. McDonald's CEO highlighted ongoing consumer pressures globally, with heightened price sensitivity impacting spending habits. Executives from 3M and Newell Brands echoed concerns about softening softening consumer discretionary spending due to rising inflation, outpacing wage growth. Bloomberg data reflects on notable increases in references to sticky inflation during earnings calls, alongside discussions on inflation, interest rates, and labor costs. Despite corporate warnings and growing economic indicators, Powell downplayed stagflation risks, attributing his perspective to the current election year. The landscape includes a Gallup poll showing a surge in households citing inflation-related financial challenges, reflecting broader public concern about economic pressures. In summary, Powell's stance remains optimistic about economic growth and inflation, contrasting with corporate insights highlighting consumer strain amid rising costs. The divergence in these viewpoints underscores the ongoing debates over economic policy and inflation management during a pivotal election year. Yeah, Powell doesn't want to get fired. So, or, wind up, being Clinton or something like that. So I'm sure he doesn't want a bullet behind his ear. So he's going to do whatever he can to keep the current establishment in the White House and in the administration happy as much as he can. Granted, he can't just, do whatever he wants, but he obviously has a lot of sway with the governors of the Fed, and, is what it is. So, all right. Well, that's all the news I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information's there. I hope you have a wonderful evening, and I shall talk to you again next time. Adios.